Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news, stories, legal issues, and policy developments shaping the crypto world every Friday at 12 p.m. Eastern. Although for me, it's actually 11 p.m. Sorry,
11
a.m.
a.m.
Eastern.
All right.
My time schedule
Yeah.
is all over the place when I can't even, I don't even know what time it is. So anyway, for those who are watching right now, I'm actually in Dallas, so I'm an hour behind Jackie, so I'm all kinds of confused. But anyway, welcome to Crypto in America Live from one person in the East Coast and one on Central Time. But anyway, hey guys, what's up?
Good morning. What are you doing over there? I know what you're doing, but for our listeners, what are you doing?
So I am emceeing the national. Good Lord, I'm emceeing the. The brain is fried.
It's been a long week. You've been getting a lot of scoops. Yeah.
It's the North American Blockchain Summit, actually, and it's put on by the North American Blockchain Association in partnership with the Texas Blockchain Council. So they have an annual conference down here in Dallas, and it's my first time here. A lot of Bitcoin miners down here. Obviously, we are in the great state of Texas, so there's a lot of miners and a lot of talk about energy and policy around that, but also focused on other things too. Stable coins. We got a panel right now going on actually with Emmett Smith. Do you know who that is, Jack?
I don't, but you can
Okay,
educate me in the class.
He's a former NFL player. He was actually a Hall of Famer from he was a Dallas Cowboy for 12 years. He was Troy Aikman's running back or wide receiver. God, I'm so bad at football. Anyway, he's in the Hall of Fame.
Player.
So he's a former football player.
Football player.
Yeah. So we've had two football players here actually to talk about their business vision when it comes to potentially integrating blockchain and crypto into their long-term vision. But Emmett Smith was talking about. I was here in the green room with him, and he was talking to Brian Morgenstern from Riot, and he was saying, he's like, I really think of Bitcoin, or I really think of blockchain as just this one giant ledger. Is that right? And I was like, yeah, you pretty much got it in one. Sure. And he's like, I want to start a business, and I don't know if I'm going to give away his business plan, so maybe I shouldn't say anything. But basically, he wants to because sports memorabilia is often there's a lot of fraud out there, a lot of fakes, and he wants to kind of solve that problem. I was like, I don't know if that's been done. I've never seen a business that's kind of gone for solving that issue. Maybe it's been done, but so yeah, he was kind of talking about that, which I thought was pretty cool. So there's some new ideas being floated out there on stage. I had a panel this morning with Chris Giancarlo, who's the former CFTC chairman. We talked about the drama going on in Washington. We talked about, which we'll get to in a minute. We talked about the streamlining of the SEC and the CFTC, which he really likes. He's happy to see that the two agencies are finally talking to each other. It's been a number of years since they did any joint initiatives, and he thinks this is a good long-term initiative, and he hopes it lasts beyond the Trump administration. And it's been a few panels on tokenization, on stable coins, tokenizing oil and gas. Can you believe that?
I could believe that because they used to cover energy markets.
There you go. I know. I feel like not a lot of people know that about you. You actually you live down here. You live down here in Texas.
I lived in Houston. I did. Yeah, it's not Dallas, but it's massive state. It's a wonderful state. I would love to go back to Texas one day.
A lot of barbecue. I had a great barbecue last night.
Okay, good.
If anyone's wondering.
Yeah. What was I going to say? Okay, with the panel that you did this morning, the fireside chat, was there anything that stood out to you about the conversation that was kind of shocking, or not shocking, but surprising?
I would say probably Giancarlo said that he didn't think what's going on right now between the Democrats and the Republicans on market structure was existential. He said, we've seen this before. This happened during Fit 21, the conversation around how to regulate DeFi, right? DeFi has always been a very thorny issue. It's probably the biggest issue that we're going to see around market structure, just because it's not a centralized exchange. It's not easy policy. The industry wants to see one thing, and regulators kind of see this DeFi thing as just something that lives outside the law. And obviously you bring that to a regulator, and they're like, okay, this can't happen. We need to have some rules here. But Giancarlo basically was of the mind that it's going to get done. It's going to take a little bit more negotiation and coming to the table. But we are seeing, we're seeing some drama for sure. If we want to get into the
Talk about
headlines,
it. 100%.
yeah, let's talk about it.
I'm dying to talk about it. You go, Ellie. This is your
All right.
exclusive.
So yesterday, basically, we saw a big dust up between Senate Democrats and Republicans over what was actually a leaked DeFi regulation proposal. And it came from the Democrat side. And it was a proposal to regulate DeFi basically out of existence. It kind of took a real big step back from what was proposed by the Republicans in the market structure draft that came out a couple weeks ago. Democrats put this forward. It was, in a nutshell, just a lot of over-regulation of the DeFi industry. It gave a lot of deference to government regulators like the Treasury, SEC, CFTC, even the Fed. Would basically just have a lot of say and control over software developers, DeFi platforms, not just the front end websites, but also the back end protocols. A lot of backlash, basically.
Right.
And it wasn't supposed to be seen by industry. It was a proposal sent by Democrat staffers to Republican staffers as part of these negotiations, right? They're going back and forth on trying to figure out how to, want clarity, basically. And when it was leaked and the industry started freaking out, the Republicans basically said to the Democrats, okay, this is where we stop negotiating. We need to have a date for a market structure hearing. They wanted to have it on September 30th. They've been trying to push for a late October markup at this point, and Democrats have been reluctant because they're saying, okay, we're not ready. We want to have more input and make this more of a bipartisan product. And so the Republicans now have said, okay, we're going to stop negotiating until you've agreed to a date. And the Democrats are saying, okay, no, we're not going to agree to a date because we don't think we're there yet. And a memorable quote from one of the Democrat offices from Ruben Gallego's press person, he said, this is like setting a wedding date before having the first date. How can we agree to that?
Yeah.
So now this is very much a stalemate. It was okay. I got to go introduce a panel in just a second. So what we're going to do is we're probably going to come back to the news headlines. Why don't we roll the interview that Gerald and I did yesterday with Lee Bratcher, who is the president and founder of the Texas Blockchain Council, and we'll come back to these headlines in a few minutes' time.
There we go. Improv. I love it. All right.
Love it.
See you in a minute, Elle.
Okay.
Hi.
I had to almost just change my frame of mind when I'm working on those issues, and then when I'm over here talking about like unclaimed property, crypto, those policy areas are very different, but they just happen to fall squarely in the lap of what we work on.
And Texas is in a unique position now where you guys actually have a stock exchange coming down to the state, right? Can you talk a little bit about that? Because as we know, the stock exchanges in the world, the national markets, right? NYSE, NASDAQ, CME, they're all getting really excited about digital assets and implementing blockchain into the fabric of the, of the financial markets. How are you guys going to capitalize that, if at all?
Well, today we have Kevin Kennedy, who's the executive vice president of NASDAQ, coming to talk about their efforts with regard to tokenization and using on-chain data to capture value transfer, particularly with public equities. So the conversation is advancing very rapidly, and we've gotten quite close with the Texas Stock Exchange and are now building relationships with NYSE Texas and NASDAQ as they open pretty substantial regional hubs. So NYSE actually moved their trading medallion from Chicago to Dallas in the last couple months, which was a pretty significant development. And NASDAQ is opening a regional office, which will be their second largest to Wall Street, to their New York office. So the momentum is certainly here. The confluence, we talked about this yesterday at the Texas Capital Markets event, with NYSE investing $2 billion in Polymarket. That's like the clearest signal anybody could give that these worlds are going to converge in the very near term.
Yeah, I'm curious. That was obviously huge. I think we've seen more emphasis on RWAs, tokenization. There's kind of this shift, right, from getting digital asset exposure in traditional sort of finance wrappers, which I think was sort of the first wave, right? I'm sure you have a lot of folks talking about the digital asset treasury companies. We saw the ETFs, ETPs, a lot of those products. But now it seems like traditional markets also want to adopt this technology as the underlying rails that runs these exchanges. What do you think it is about Texas that would make somebody be interested outside of moving, from Chicago or New York or something like that? Like, what is it about this market that's so interesting?
Aside from the nice weather.
Aside from the weather and the taxes, I guess,
Yeah.
maybe.
Taxes and weather.
Yeah.
Weather is only good 6 months out of the year.
Yeah.
We have a 6-month long summer in Texas, but a couple things. One is we touched on the taxes. The business climate is very, very good here. People, all other things equal, would much rather do business in Texas versus California, New York. Now, there are significant pools of intellectual capital and money capital in both Silicon Valley and New York that are hard to overcome. Those are pretty strong network effects, lots of inertia. But that is starting to deteriorate, and it'll take time. But Dallas in particular is becoming a hub of capital markets. And in 5 years, right now it's a little bit silly to say Dallas in the same sentence as New York and London. But I think in 5 years that will certainly be part of the conversation. Goldman Sachs is moving 7,000 employees here. They're building a building in downtown Dallas, not just a small building, like a huge skyscraper. Fidelity has 14,000 people here in Dallas. It's our largest campus. It's even larger than their headquarters in Boston. Charles Schwab has opened up a large campus here in the last couple of years. Even Canadian banks are moving. So the large Canadian banks, which they have a little different model. They're kind of like GSIBs only, right? They don't do like the regional banks in Canada. They're moving their regional headquarters to Dallas from other parts of the United States. So, 1,000 employees here, 1,000 employees there. You end up with a financial center that is not encumbered or burdened by the kind of the old way of doing things, and perhaps on Wall Street. And so I think people are excited about that potential.
Do you think so? Is this just like the Miami reboot?
I was about to ask that.
Are we just saying Miami didn't get it quite right? Come to Dallas.
A lot more staying power in Dallas.
Yeah.
A lot more capital, family office, old money, and industry. So if you look at Dallas versus Miami from a kind of a GDP perspective, Dallas blows Miami out of the water. Now it's typically been a quieter city. Miami's a pretty loud city, and so they, attract a lot of attention for that, and that's great. But Dallas is going to start getting louder.
A year from now, NABS conference next year. What's the theme? What do you think is the theme of next year's conference?
I hope the theme is clarity, and I hope the theme is, I put these things in 3 buckets, right? You have Bitcoin and Bitcoin mining, stable coins, and you have sort of that programmable blockchain world, the Ethereum world, the Solana world, the DEX world. I think Hyperliquid's going to be a big deal in that world. So I think those 3 conversations will probably permeate the next 1, 2, 3, 4 conferences that we do. Although I could be wrong, this space moves so fast.
Yeah,
That's true.
We'll see. It's going to be exciting.
All right. Well, that was a good interview.
It was an interesting conversation. Lee is juggling everything because he's pretty much putting on this entire conference by himself. So we had planned for a little bit longer of an interview, but he was putting out a couple of fires. So we told him, we're like, okay, we're just going to have you back on the show or the podcast for a longer interview next time. And he's like, yep, I'm game. So we'll have him back on to talk about more things. But exactly. I thought, something that stood out to me was that the Texas Stock Exchange actually just got approved for its license down here. And so a lot more, capital markets capital is coming down into the state, and a lot more Wall Street firms are moving down here. I was told that Goldman Sachs is building a building down here in downtown Dallas. It's kind of becoming, and you heard Gerald say it, it's kind of becoming the new Miami, right? It's like, I don't know, it feels like Miami circa, I guess, 2021.
2020, 21, yeah, exactly.
Yeah.
100%. All right, let's get back to the news, Ellie.
Yeah, let's do it. Well, we did talk about the Senate Republican
drama.
Yeah, so I feel like we kind of did wrap that up, but I guess we'll see where we stand. There's obviously the standoff, so we'll see what happens. I think the latest is I just scrolled Twitter briefly a few minutes ago, and there is an industry letter going out encouraging people to sign, saying how against the Democrats' proposal people are. So they want the industry to sign on and have senators hear from them and say how disappointed they are. Although I think a lot of calls to Mark Warner's office yesterday might have given that away already. I'm not sure they need a letter to know their distaste at this point, but we'll see.
Right?
Yeah, exactly.
It's a Belly exclusive.
Yeah, there we
Thank
go.
you. Thank you, Taylor.
Thank you, producers. Yeah.
The next story was something that was on Monday when I was putting these
Right.
headlines in. I'm like, oh my
Feels like
gosh, that was
forever
this
ago.
week. It feels
I
like
know.
forever ago, but
Literally.
the first ever spot staking ETPs went live on Wall Street on Monday, and it was with Grayscale's staking Ethereum ETFs and its Solana Trust GSOL. Now, this was a big deal because we had expected ETFs to come to market with staking, right? But these were the first spot staking ETFs. And I think there was some confusion because another company called Rex Osprey had offered staking just in a different way, a different fund structure. But these were sort of the first like really big deal spot ETFs to offer staking. And it's going to bring a lot more liquidity to the market, to the ETF, to the ETF structure specifically. And I don't know if you have any thoughts on it, but it's a big milestone for Grayscale and for crypto ETFs in general.
Grayscale has been a leader in this front, with the ETFs. They were one of the reasons we were able to get it because they sued the SEC back, right? And then now we have the staking ETPs with Ethereum and Solana. I would imagine it would expand into other different crypto assets that we're seeing on the ETF front. I also think that in this crypto world, like staking is such a normal thing, but to get access from an institutional side where you need to operate within like specific guidelines and regulatory frameworks, it's going to open up the doors, in my opinion, to a lot more liquidity, like you said. Whereas like right now, staking has been open to, the crypto people, those who are a little more adventurous. They don't really care for like the KYC as much. They'll just go and do it on chain. Whereas this like can actually help institutions validate networks and also earn yield on it, essentially, is the simplest way of staking, right? So
and for so long under the prior administration, Gary Gensler was dropping hints that staking activity violated securities laws, right? And this is just final proof that staking is not a security. And so,
all right, moving
come a long
into
way.
TradFi's Crypto Week, then I think that's the perfect segue. You want to take it away?
Yeah. So this week we saw more of TradFi and crypto converge. I think the biggest headline was probably Polymarket getting a $2 billion injection of capital from ICE.
Not bad.
Not bad as capital injections go. $2 billion is pretty good.
Good week.
But ICE is the parent company of the New York Stock Exchange.
Yep.
And I mean, what's really cool about that is I was sitting in the same room as Jeff Sprecher, the CEO of ICE, and Shane Copeland, who is the CEO of Polymarket. They were literally sitting next to each other at the round table at the SEC 2 weeks ago. And they just had poker faces the whole time, right? Like you would not know that the two men had probably signed a deal. You wouldn't know, right? And it's so funny. A week later, this massive news drops, and it's really cool. I think for Shane too, who has obviously gone through a lot to get here. I think he's super young too. I think he's in his early 20s.
He's 27. But yeah.
Oh, okay.
I mean, he's been grinding since like 2020 on Polymarket, I believe. I'm cracking up at like, I don't know if you're scrolling Twitter and you're seeing like all these people talking about like their one little story they have with Polymarket or Shane. Like everyone's getting like their little clout bite at this. But it also goes to show like sometimes like hard work on this front takes years and years and years. Like he's been grinding in the trenches on this since 2020. He has this like famous photo of him working, I think from his bathroom, maybe his toilet, unclear. He called it like their headquarters. For what reason? I don't know. But
it's like his laptop on his laundry basket, right?
Yes, exactly. And I think it just kind of goes to show that like this is a category that wasn't even thought of a few years ago, like prediction markets where you could just bet on your opinions, the news, or the future of things. And now all of a sudden it's a multi-billion-dollar valued company. It's like $9 billion post valuation. I think I also saw that Kalshi is about $5 billion right now, and they just raised about $500 million, which hey, not what Polymarket did, but they'll get there.
No, it's incredible. And then another big company, right? Another big investment bank, Morgan Stanley, dropped restrictions on crypto for its wealth clients. This was another one who was pretty, a little bit reluctant, right, to come onto the crypto scene, or at least advise when it came to advising crypto its wealth clients to allocate into crypto. And just this week, it said 2 to 4% was probably the right amount for its clients to start putting some money into digital assets. They said Bitcoin specifically was akin to digital gold, and now that's a famous line from BlackRock CEO Larry Fink, who was the first to kind of take Wall Street by storm with the Bitcoin spot ETFs. He's a Bitcoin, I guess you could call him a Bitcoin evangelist at this point, but they're coming, right? There's and that these are just two of the stories that I think 3 or 4 major TradFi coming to crypto stories dropped this week, and I feel like these were the two big ones. But we're seeing it every day now, every day. So
starting October 15th too, with Morgan Stanley, advisors will be able to pitch crypto funds to any client as well. And previously that option was limited to those with, quote, an aggressive risk tolerance of at least like 1.5 million in assets. So it also is kind of opening up the door to another category of people that were not previously tapped into. Again, TradFi,
and they're going to launch crypto trading next year through a partnership with Zero Hash, who, by the way, we will have on Crypto in America podcast next week. So that'll be an exciting episode to dig into.
And last but not least,
well, we've had a Solana week, haven't we? So we might as well end the news segment with a Solana story. So 21 Shares crypto researcher Matt Mena says that Solana made $2.85 billion in annual revenue this year alone, and it rivals the likes of Palantir and Robinhood, 2 massive Web2 companies, obviously. And that blockchain is showing continued strength in categories like DeFi, trading tools, DePIN, which is decentralized physical infrastructure networks, for those who don't know, and AI apps. And even after the meme coin hype has cooled, and obviously Solana for a long time was kind of hailed for its meme coins. Dog with hat is always one that comes to mind for me.
I had dog with hat. I still have it.
you?
It's not the best investment anymore. It was at one point.
It was a cute hat. I'll give it that. But
it was a cute hat. So you can see here, this is the 20 years from Matt, and honestly, it shows like we were talking about before. There's a bunch of different avenues here, and I think a lot of times people jokingly or seriously talk about Solana in the front of meme coins, right? But I also am very familiar with the chain and know that there's a lot of DeFi activity on there. And it's interesting to see kind of how like that's shaped out over the year. In January, things were extremely large, and it wasn't even just in meme coins, but it was other areas like you mentioned before, DePIN, AI, gaming, etc. And so it'll be interesting to kind of see where this revenue goes in 2026 as the market continues to kind of develop on this front. I think there's also another chart that kind of shows the growth of Solana compared to Ethereum, right? I mean, wow, just look at that. That is crazy.
That's wild. And we had Anatoly.
Ethereum, come on.
I know.
I mean, I know it's also like decentralized. It's a bit different, but I mean, they're both decentralized. But it's just interesting to see like how much they've built in such a short amount of time in comparison, right?
Exactly. And we talked to Anatoly about this on the podcast this week, just that insane growth in such a short amount of time, right? They launched in 2020. It's now, the end of 2025, and they've become one of the most used blockchains, in the world. It's insane. And it's obviously one of the most lucrative. So, good for them. Good for them.
And when we had Anatoly on, we did ask him, what do you think is a sector that's overlooked on Solana that is actually doing extremely well? And he said DePIN. So there you go.
Helium and Hive Mapper, was it? Were the 2 that he highlighted? Yeah. Well, that wraps up the news segment. So I think we have you guys. I wasn't able to join yesterday because of my emceeing duties here, but you guys have a segment with Cody Carbone, the CEO of Digital Chamber. I'll let you introduce it, but
Before we get into it, I just want to shout out this comment. We love the comments from you guys and we appreciate it. We see them all. So if you have thoughts, comments, questions you want us to ask guests, let us know. But why doesn't it have 500K plus
I
views?
love this. XRP'd off. Wait, I love this.
That's hilarious, that name too. I love it. Yeah.
Comment on some things. What a great show. How is this not being viewed by 500K plus? I'm going to push from my end for whatever that's worth. Love this. Thank you so much. We appreciate it.
Yeah. All right. And on that note, we will move into our last interview of the day. It is with the Digital Chamber CEO, Cody Carbone. We talk about the DeFi situation that Ellie had the exclusive on and a few other things. So stay tuned. Thanks, guys. Now we are bringing up Cody Carbone, the CEO of Digital Chamber. Ellie is on stage at the event, so me and Gerald are reining in the horses here, I guess. I don't think that's a saying, but I'm making it a saying. Cody, welcome.
Thanks so much for having me, guys. Good to see you.
Yeah, good to see you.
Good to see you. I know you recently stepped into the CEO role not too long ago at Digital Chamber, right? And I think something I want to ask personally, I know you and Gerald have a friendship, but like, as kind of the crypto momentum in Washington changes, and there's a lot of like movement, and then there's also the government shutdown, which we'll talk about too. But like, how would you kind of assess at like a high level the regulatory and political climate of digital assets right now?
Ooh, good question. Chaos. It's been it's been 9 months of chaos, but in the best possible way. All of the activity, which has just been an onslaught of it, has all been fairly positive. So we have just been building on momentum, it seems like, from the November elections to where we are right now. The White House has been coming out with new actions, it seems like almost daily through the executive agencies. We finally got a bill across the finish line. Congress is moving at light speed as it relates to Congress. And so it's just been the best kind of chaos. It almost seems like it's too hard to keep up with at times. And that's why we've had to expand our team. I know you guys are keeping up with it as best as you can. But it's been a lot of fun. It's been exhausting, but the best kind of momentum and chaos in DC.
Yeah, Cody, I know in addition to our friendship and our neighborhood, alliance that we're building out there in Alexandria, we've also both seen kind of both, modes of DC as far as it relates to like crypto. And so prior to the election, I know I've called DC kind of a depressing place to be for crypto, but I think it was also a much more challenging place to be running a trade association, right? Like it was just very difficult to notch wins. You mentioned the expansion that you guys have been going through, but can you just talk a little bit about even just the approach to like membership and the approach to Congress that you guys have had to shift in this new sort of like too much winning environment?
It was so depressing that I had to move to be your neighbor in Alexandria, Virginia, like outside of the district. Yeah, it has been a huge change. And I think the biggest change has been, we had to be so reactive under the Biden administration. It just felt like there was so much coming at us. It was always negative, and it could be somewhat depressing. And we never got an opportunity to be proactive and to really lay our cards on the table as like, here's what we think from a regulatory standpoint we need for the industry to be successful in the US. We were always just combating the enforcement actions, or if there was a rulemaking, the bad rulemaking through notice and comment, or the bad bills that were being proposed left and right. We never had that opportunity to really roll up our sleeves and say, here's what we want. Here's what, working side by side with the regulators, the administration, or Congress, here's what we think we need for the U.S. to be successful. So that proactive approach has been our focus since November, but really since January 20th and the new Congress being sworn in early January. Hey, let's set our agenda. What do we want from a legislative standpoint, from a regulatory standpoint? Who do we need to work with on Capitol Hill? Who do we need to work with from an industry standpoint? You mentioned the membership. I understand why it was hard for folks to say, I want to join a trade association and really lobby and be active in DC under the past administration. Folks didn't want to come to DC. I always took offense to it because I'm like, come hang out. We're fun. We're cool. We can show you the cool places to go in DC, but no one wanted to come here. They didn't want a target on their back, and I got it. I totally understood.
Like Wizards games, like it's probably going to be fun, but you're not, you might not win, but
you're not going to be entertained. You'll probably go home a little more depressed than you were coming in. And I get that, and it was a depressing place, and I don't want anyone to come here and feel like, hey, there's going to be a target on my back because I'm trying to educate policymakers on what this product is that I'm building. That has completely changed. There's been a 180. In addition to being proactive, DC has become the hotspot to be. We've had prospective members join the digital chamber because they want to be more active and more engaged. We've had members who have stayed away for DC for 4 or 5 years, or maybe have never been here at all, that wanted to come in. We've had companies that have been overseas that have not been part of the digital chamber. They've never tested the U.S. markets. They've never built in the U.S. markets. But now that there's a friendly or hospitable regulatory environment, they're saying, okay, we need to tap into those markets, the most liquid capital markets in the world. We want to build in the U.S. So how do we navigate the regulatory waters? Can you open up doors for us? Can you introduce us to the White House Crypto Council, to the SEC Crypto Task Force, to Congress? So that, in conjunction with being more proactive and not having to just respond to all of the negative, media headlines or regulatory policy developments every day, has made for a totally different environment that is much more hospitable and friendly.
Mm-hmm. So it's not depressing anymore.
No, it's not depressing.
Not
it's beautiful.
We'll
here.
talk about it. We still have our moments. We'll get to that. But
right. Yeah. I mean, with the government shutdown at play, how does that kind of ruffle the feathers?
Well, that's depressing.
Yeah, that's okay, here we go. So I got to the core of this. Yeah.
Yeah, it's not great. We've had so much momentum, and it felt like we were just stacking wins. I think you said, Gerald. We had all of these rulemakings that were coming at a frenetic pace. 30 days to respond to Genius Act rulemakings coming out of the CFTC or the SEC as it relates to the White House crypto report. It was nonstop, and it felt like we were building and building. We had no action letters from the SEC for the first time under this administration right before the shutdown, and the shutdown just puts a pause on all of it, and it stops us in our tracks, and that's a real bummer. And so we're hopeful that the shutdown will be ended shortly. I know both sides seem to have their heels dug in, but we're not going to stop. I think it's a good time for us to be proactive and to say, okay, we're going to continue to respond to those rulemakings, even if the deadlines are being pushed a little bit. We're going to see where we can tackle, what policy issues we can tackle as soon as the government shutdown is lifted. Who do we want to go engage with? Market structure legislation is still being negotiated. We're still moving towards that. So yes, it sucks that a lot of this is on hold for now. I'm hoping it's lifted very quickly so we can get back to it and build the momentum again. But we're going to continue to build behind the scenes.
Yeah, I know from a regulatory agency perspective, it's been really frustrating too, right? Because I feel like that was one of the areas where we kept getting progress and there was buy-in, even in the absence of passing legislation. We had the 00 no action letter, we had the custody no action letter from the SEC, almost on the cusp, right? Like at the 12th hour, right before the shutdown. And to your point, you would think that Congress would be going pretty quiet, but we somehow still have an opportunity to have sort of partisan issues come up. I think it was our very own Elliot Tarrant broke the news this morning, and it's been picking up a lot of steam on social media and elsewhere, that several Democrats, I believe led by Mark Warner's office, who we are both constituents of. Mark, please love crypto. The gist of which was that some of the parameters that they want to put around DeFi essentially make it untenable to build in DeFi in the U.S. Have you had a chance to take a look at some of that outline, or want to comment on how that could potentially impact DeFi? I know it's upset quite a few people.
Yeah, it is upsetting. I feel like my mother. I'm not mad. I'm disappointed. I'm disappointed because I thought there was so much progress that was being made. There's a real opportunity here after Clarity passed the House with such a massive bipartisan vote to get a bipartisan market structure bill done pretty quickly in the Senate, you would think. Now, that's not the approach Senate Republicans have taken from the Senate Banking Committee or the Senate Ag Committee. They're doing their own thing, which I get. But the DeFi proposal that came from Democrats recently, and this is being led by the 12 Democrats that issued market structure principles just a few weeks ago, it is an unserious attempt to regulate DeFi. It really does set us backwards. It completely ignores the Blockchain Regulatory Certainty Act that was in the Clarity Act. That was a bipartisan bill that says, hey, if you're a DeFi protocol, you are not a financial institution and you don't have to comply with the Bank Secrecy Act requirements. It tries to have the SEC regulate front ends as brokers. It is sending us completely backwards, and it is ignoring all of the progress I felt like we have made from a bipartisan standpoint on regulating DeFi, on regulating the crypto markets over the last 9 months. And so it's really disappointing to see that that's their opening salvo for Senate Democrats in this market structure debate. I'm hoping that this can be fixed quickly. I am optimistic at some of the progress that's been happening on market structure, which probably sounds crazy to some of the listeners after I just went through that this DeFi escapade. But you look at what Senate Ag is doing, Cory Booker taking the pen on Senate Ag to lead for Democrats on that drafting there. He has been a champion of the digital asset industry for a long time. He was one of the initial co-sponsors of the DCCPA several years ago. He wants to get a bill done. I know Senator Bozeman on the Republican side in Senate Ag wants to get a bill done. I'm hoping that Mark, if you're listening, Senator Warner, as constituents, as Gerald said, that this was just, hey, we're going to put our cards on the table. We know this is not going to be the final legislative text. We know that there's going to be some issues here. We're going to come and meet in the middle. Now, the middle needs to be a lot better than what was proposed from Senate Democrats. And Ellie broke it today, as you mentioned, and I'm sure this text will come out over the next few days. I think I saw Punchbowl have it after Ellie and is releasing some of it, but it's really disappointing. Until we can get some of these like very fundamental concepts of market structure figured out, like how to regulate DeFi, where is the accountability going to be in the DeFi tech stack, we're going to be waiting for market structure legislation for a while. So it does set us back a little bit, but there is still reasons to be optimistic on getting a market structure bill done. Where does the White House come into it? The White House was so instrumental in getting the Genius Act across the finish line. They were sitting at the table every single day. I know they've got a lot on their plate with the government shutdown, with what's happening internationally. And so I'm expecting them to get back into it and to be very involved quickly. And so hopefully these negotiations continue to progress. But today is unfortunately a setback, but we can move past it pretty quickly.
Yeah, I want to get to the administration, and I know you guys have had really good relationships with Bo Hines and his previous role, and now, of course, Patrick Witt, taking up that cause. One thing that struck me as part of those provisions that came out today that seems like just like something we can't get past as an industry was this notion that devs are going to be regulated intermediaries, right? And it's like, what do you think? I mean, everybody I think was pounding the drum, education. We've got the Roman Storm appeal, hopefully picking up here in a bit, and that's obviously kind of a unique set of facts and circumstances. Why do you think Congress, but particularly it seems like Democrats have a much harder time with this concept, keep wanting to circle software developers as these intermediaries, these financial institutions, like in and of themselves? I feel like it's, as a concept, we should be past that, but we're just not. Like, how do you think we get there?
It's easy to say education, and I agree with you. And it's a shout out to the DeFi Education Fund, because they are doing the Lord's work in pounding the drums every day on Capitol Hill. I think this concept of decentralization and not having intermediaries in a trustless environment is so foreign for policymakers right now that until they can visualize it, and we are not using terms like even DeFi or decentralization, which are still foreign to them, but we are putting it in terms that are relatable to them. And we are showing them exactly how this is different or similar, like a transaction being conducted through a regulated financial institution, and why, hey, we don't need an intermediary here because this is where DeFi puts trust through the transaction process. Until we can show them that, I think they're still going to think this is such a foreign concept and not get it. The way that Democrats who have been opposed to DeFi or just blockchain generally have phrased it to me is that this is a way to skirt the rules and regulations that have been on the books for 50 years since the Bank Secrecy Act was, first passed in 1970. They're not thinking of it as a way to improve the process. They're thinking of a way as to get around the process. And so until we can really push through that blockade, is like, no, we're trying to innovate and build on top of it. We are not trying to skirt around it. We're not trying to not follow the rules or not comply, but we're trying to make this more efficient, cheaper, quicker for everyone involved. And we can do that in a way that still provides as much trust and safety and soundness that a normal transaction going through the bank process does. Until we can get through that, they're going to have a hard time with this. And I get that. It's a completely new concept, but we need to really show them where they can visualize how a DeFi transaction works. And I think we need to do more of that. It's easy to tell, and we've been doing the education, but we need to show them through graphs, through videos, through actually having them have the technology in their hand and conducting a transaction. Until we can do that, it's still going to be a pretty uphill battle.
Mm-hmm. So it ultimately comes down to kind of learning and education, which is often the case in DC.
I know.
Like,
It's
well,
like the frequent buzzwords.
Yeah. I mean, like for us, it's like digital assets, blockchain all the time. For them, it's like one of many categories, right? So. Yeah,
and I would encourage everyone that's listening. Like the members are great. We talked to Senator Warner, we talked to Senator Lummis, and they're fantastic, and they're learning, and they're trying their best. Staff is who makes the difference. I'm always shocked as you can talk to 10 members of Congress and they're like, okay, they nod their head and you're trying to educate them on what DeFi is or just what Crypto 101 is. After every one of those meetings as a former staffer, the member of Congress then goes to the staffer and goes, okay, do I like this? Can you tell me more about this? Can you give me a one-pager about this? And so we need to focus more on educating the staff and they're more accessible, and I think we'll do a much better job.
Right. I think something else I want to ask you about too, Cody, is like obviously you've been pushing for a clear roadmap in DC, and we talked about the shutdown, and we talked about maybe like a little kerfuffle between Democrats and Republicans. But how do you kind of keep up the momentum on something like this, when all of this might be at a halt? Like, what do you really do right now?
It's really tough. You got to do a lot of building in the background. So we've got working groups at the Digital Chamber. We're getting our members together. We're still responding to those proposed rulemakings out of Treasury or from the CFTC. We're still engaging Capitol Hill. The meetings are fewer and far between, but the Senate is still in session. They are still working through having hearings. They still have their crypto staffers there. They're still negotiating market structure. So we have not taken our foot off the pedal. We're still doing meetings. The House is virtual, but we talked to Congressman Gottheimer today about what's next after, market structure. How can we be helpful? We're still trying to meet with staffers who are still here in DC, even though they may be furloughed or they might not be getting a paycheck, which really sucks. But they're still working. And so, yes, the shutdown is taking a lot of the prioritization off of digital assets policy, but we're not stopping our work. And so if we can continue, for lack of a better word, but build in the background, and we can be ready to go when the shutdown is lifted with all of our responses and all of our engagement opportunities. And then where can we be more proactive? We talk about market structure all the time. We talk about tax as maybe next. We talk about the Bitcoin Act. Where else do we need legislation? What other applications of this technology do we need regulatory, guardrails for that we can be engaging on? Where can we go with the SEC Crypto Task Force? There's no action letters now. While they might not be issuing no action letters during the shutdown, where else can we ask for no action letters or exemptive relief? How are we engaging? We just met with the OCC on Monday. They are not an appropriated agency, so they're all there working. So I encourage more people to go talk to the OCC or those agencies that aren't appropriated, that are still have their doors open. So there's a lot you can do, continuing to get ready. But once the shutdown is lifted, we'll be ready to go, and you'll see an onslaught of work come out from us.
I want to ask you about the notion of this like unfinished business or continuing momentum as it relates again to like the digital assets working group at the White House, right? So. Yeah. I think we were all there the day, the report was published, and, incredibly grateful for the work that it took to put that together. I know one criticism of that deliverable has been that there was a pretty significant kind of like mission accomplished vibe around that, which, and don't get me wrong, like it was a great, it was exactly what it was intended to do, right? It was kind of set out that roadmap. How have you seen the administration, with all of the different things going on for them right now, right? Like I think the president actually may go to the Middle East this weekend and try to put together a peace deal. So it's like there's obviously many more important things than crypto going on in the world. But how have you seen Patrick Witt step into that seat and continue to be able to push from the administrative side or the executive branch on some of the progress that we still need to see?
You're right. I think it's easy from the outside perspective to look at that day in the White House when they released the report and the Genius Act signing ceremony 2 weeks before that and go, this feels like a victory lap. Like, mission accomplished, we're done here. I remember calling Patrick Witt about a week after that report was released and shortly after Bo announced his departure. And I said, well, what's next? Like, this is out here. Where are you guys engaging next? How can we be helpful? And he's like, well, we just held another White House Crypto Task Force meeting. We're holding these weekly. We're not letting up. We want to make sure that the U.S. leads. That's going to come from, hey, there's a ton of recommendations in this report. Our job is to be on top of the agencies to make sure that they are working under the timeline that we expect, and we want to move quickly. So we have all these recommendations for rulemakings, for guidance out of Treasury, out of Commerce. The White House Crypto Task Force sees themselves as kind of the hub, and they are, or the manager, project manager, and they are pushing all of these agencies to move quickly. As well, they're still taking meetings left and right. I was always amazed at Bo's ability to take 9 hours straight of meetings with 18 different crypto companies, take notes, and be able to digest it all. And Patrick has kept that up, and the team has grown, which is awesome. They've added deputies within the White House Crypto Council. David Sachs has hired more people internally. So they're taking more meetings to continue outreach to the industry. They never want to feel like the industry doesn't have a voice inside the White House and that they're not being listened to. And so it's been pretty remarkable to see the work keep up. I think it's very easy to say, okay, that report is out there. It's been out there for 2 months now. When are we going to start to see some results? Congress is obviously a lot more difficult to pass legislation, but there is a lot those agencies can do. And I've been pretty amazed at the influence that the White House Crypto Council has in saying, hey, Treasury, we said in this report that there's going to be ETP staking tax guidance. Are we expecting that soon? And from every conversation I've had with those agencies that have deliverables under this report, the council has been very engaged and they are moving at light speed. And so I imagine that once the shutdown is lifted and we start to see, what does the next few months look like before we get to 2026 and campaign season, that you'll see the agencies come out with a lot more guidance as it relates to this report. And a lot of those recommendations will start to be ticked off.
Mm-hmm. Cody, one last question I want to ask you personally is, Gerald and Ellie are out in Texas right now. I stayed back in New York. It's all right. They could go have fun without me. But they are at the North American Blockchain Summit, which, is kind of focused on, I think local Texas state level legislation, but then also there's like the national conversation, right? So I'm curious from your perspective, Texas and a few other states are charging ahead on blockchain policy. Do you kind of see that state level leadership helping or complicating the national regulatory picture for this industry?
I think the easy answer is depends on the state. Some states can be more helpful.
States, all 50. No.
Yeah. Some states can be more helpful than others. I think it depends, which is almost a cop-out, so I apologize. But Texas has been very helpful. I think, if you when I talk to a lot of our members, they would prefer just a very clear federal pathway. They don't want there to be this patchwork of regulations where they have to apply for a license for X in New York and in Texas and California, that a federal pathway, or at least the option of a federal pathway, would be most helpful. I think having the dual pathway where I actually like going the state route. I want to operate in Texas or I want to operate in Wyoming and I don't want to be regulated at the federal level. I think that's critically important as well. We are starting to see some issues on the securities enforcement action side. There was just a letter that came out this week from a lot of the state securities regulators against the market structure bill because they think it inhibits their power. That's where I think federal preemption could be very helpful. But it really depends on the issue. I do think a dual pathway for most things where, if you want to be regulated at the federal level and you want to preempt the states, you have that right and you want that clarity, that's great. You should have that. If you have already gone the state model and you want a money transmission license in 48 states, or you want to be a limited purpose trust charter for multiple states, and you have that option, that's great too. So there's going to have to be a balancing act. There's never going to be like this clearing of the decks where the states are going to be completely out of digital assets and everyone's going to be happy, or the federal government's going to be a monopoly on it all. There's never going to be that. So I think as long as there's a balance and people have optionality in which regulatory pathway they want to go, we'll be in a good place. But there are times where there needs to be preemption and we have to have the states quiet down a little bit. But there's a lot of work to do in the states. They've been very active under this administration.
Yeah, Cody, I know job's not done. We appreciate all the work you're doing. Looking forward to the next time we can go up to Elmo's and grab a coffee. But otherwise, yeah, really, really appreciate you coming on and jamming with us, and look forward to the next time. Appreciate it.
Heck yeah, guys. Love being here. Thanks, guys.
Amazing. Well, I guess that wraps up.
What a good interview.
I know, literally. I think Cody is so fun, and he's just so easy to talk to. And he's also just like a wealth of knowledge when it comes to the things that we talk about on the show. So, Cody, if you are listening still, you could come back on. You're welcome.
We'll have you back. I think you've earned that, right?
Yeah, literally.
I know. I was just sad I couldn't join, but next time we have you on, I'll make sure I'm there.
Yeah, you were getting the scoops. You're running around emceeing. It's all right. We can forgive you this time. But yeah,
one of the ushers backstage yesterday was like, he goes, "You're kicking ass and taking names."
Hell yeah,
thanks.
Exactly. Every single Friday, and then Monday, Tuesday, Wednesday, Thursday. Yeah.
Well, speaking of every Friday, make sure you guys tune in to Crypto in America Live every Friday. We'll be here at 12 p.m. Eastern. Hopefully, we're all on the same time zone next Friday. Hopefully, we'll all be here. But you never know with our schedules. We'll see. But we love having you all here joining us. I think we're up to 7,000 live viewers right now. So we just want to express our thanks. We love, talking to you. We love the comments that you guys put in the chat. So please keep them coming. And we're excited to see y'all next week. And I'm saying y'all, I've been in Texas for 48 hours. That's what happens.
I love it. I love it. Southern Ellie arc. There we go. Have a great weekend, everyone. And thanks for watching.
See you next week.
Yeah.